This conference will now be recorded.
All right. Good morning, everybody. This is Greg Morton. It is Sunday, February 12th, 2023. I'm out of town, so I'm doing this on my laptop. So hopefully it will be fine. And we'll be fairly quick because we have our big monthly meeting coming this Wednesday, and we'll cover a lot of this in more detail. So today we'll look at the M factor like we always do, current market review, my thoughts on current trading plan, and then we'll look at some charts in MarketSmith that are actually setting up. And then again, our monthly meeting is this week, and I'll give you the agenda for that if you're interested in attending. So as always, we start with the M factor, which Bill repeatedly emphasized was the most important letter in Canslim. We're going to basically look at three things to come up with a current diagnosis or interpretation. We don't want to predict. So we're going to look at the action of leading stocks, action of stocks owned, which is the group teaching portfolio, and then market pulse, distribution day count, price and volume on the indexes, all of which I sort of combine into the coloring book and some things that I use for market direction. Other people may use other things. That's fine. Just figure out what works for you and be consistent. The coloring book and the indicators that are incorporated in there are the ones that work for me. And I haven't seen anything else important enough that I'm like, oh, I need to follow that also. Because you can follow too many things and get paralysis by analysis. So we don't want to do that either. So I said really last weekend, that it did look like we had seen a market trend change. After this week, I just emphasize still proceeding with caution. Definitely saw some pullback this week. That's normal. Markets don't go straight up. We don't expect them to. 1 week doesn't put us back in a bear market or a downtrend, but we just want to pay attention. So let's hop out of here, go over to MarketSmith and take a look at the index charts. So here's the NASDAQ. Let me close that. Oh, come on. It's running slow. So anyway, here's the daily. So you can see really we've been down for the past 3 weeks. Past 3 days, and had a distribution day on Thursday. Did lose the 10-day, but you still got the 10 and 21 and 50 are sort of stacked nicely. The 50 still trying to get back above the 200-day. I don't know why that's not working. We reload MarketSmith. We'll just try again. Okay, there we go. So here's the daily. So we're still holding the 21. So that's constructive. You can still see we're, more than 25% off the peak when the bear market started. If we look at the weekly chart, low range close, holding in there, still looks like we've had a third leg down and are hopefully moving back up. So, not a great week, but nothing real bad to say. S&P 500, same thing, lost the 10-day, holding the 21. These moving averages are actually stacked in the correct order because the 50 is back above the 200-day. So making some progress there. NYSE, again, below the 10-day, that's rolled over. Come back, got a battle going on at the 21-day, which is better than a battle at the 50-day. The Dow came back and actually closed under the 21-day. Of course, this index led a lot during the bear market, so it's not surprising to see it losing some of that leadership if we are in a new bullish uptrend. Russell, small caps, several bad days, but still, especially that distribution day, low range close, but still holding the 21-day. S&P 600, sort of the same thing, holding the 21-day. So we'll be watching this week to see if we see further downside progress or if we sort of just kind of continue to consolidate. I think Thursday was a bad day this week. That was the distribution day. If we look at let's go to the coloring book. Yeah, so that day, both the NYSE and the Dow actually flipped to yellow on the MMTS trendline system. I still have 12 buying days, 8 selling days in the last 25-day window, 1 distribution day on the NASDAQ. I think I have 2 on the S&P 500, but think IBD has 3, so I've got to figure that out. I must have missed something. I have 4 on the Dow, which they don't check. Market school exposure still at level 7, which is as high as it gets, 100% plus a couple signals in the pocket, so to speak. We did have new lows on the exceed new highs on the NASDAQ on Friday, so that's one of the things I look at. I hadn't filled in those 2 days of data yet since I was out of town, but I will. Big thing coming up next week, of course, is the CPI report on Tuesday. If that comes in tamer than expected, could be very nice for the markets. Comes in super hot, we'll just have to see. And I'm sure there's some Fed speakers this week. I just don't have them on the docket yet because the economic calendar I look at, I think it updates today later on. So that's sort of where we are. The group teaching portfolio, our short position in Fryer Battery is still working well. The other ones were kind of up except on QQQE. Just a lot of stocks extended now, but we will look at some that are setting up, and it's kind of been hard to get traction this year. Still, isn't it flat? Yeah, down 0.4% year to date. So, and of course we have some earning reports coming up on Fryer. The other ones, I mean, we have 3. Oops, I got to fix that. I'll have to get the date on Axon and fill that estimated date in when I have it. So, and we'll talk about some of that more on Tuesday night also. So that's sort of where we are. My market signals, I think we're still green light environment, okay to keep wading in, but just be careful. If you plunge or go flying through the door, it's going to smack you in the face. So we're sort of, I'm almost in pause mode, still optimistic, but just watching. So as always, good working decisions that are working, they beget potentially more good decisions. Our ultimate goal is to still just own 6 to 10 stocks total for Canslim growth stock investors. And so we won't be picky. Stocks in our portfolio need to earn the right to be there. And it's still been a little bit difficult this year because some of the best ones have been viable gap ups like ALGM. So you either got it or you didn't get it. Had to really be on top of the game. So no forced trades and no audibles, as Mark Minervini says. I think those are always good things to remember. So let's hop back to Market Smith. And I just put some charts in here. So I said during the week or Friday, I was kind of cutting up with Marty and said, hey, what happened to all the good charts? Now that I've done most of my weekend routine, I probably would take that back. There's still some things that are setting up nicely. I just threw some in here. Let's go to weekly charts since we really work off of those. So this is a nice chart. Strength coming in up 1, 2, 3, 6 weeks in a row. A little bit extended now. 8% from the pivot. Doesn't quite have Canslim sales growth, but has a lot of new. So, and it actually broke out right here. So anybody got in it, it hadn't triggered a sell signal. So, looking okay. So that's a constructive chart, even though it's a little bit extended. Dexcom reported this week, so we'll see what they do. Can it finish a base here? Can it put in a handle? Super strong earnings. So I need to go read the conference call on that one and see what they said. MPWR. And no, these are in a lot of different spaces. I mean, we've seen semiconductors, medical. Here's another one sort of in semiconductor land. So setting up stage 3 cup. Of course, bear markets normally reset most base account. So see what it do. Can it handle out? Again, good. These are all Canslim growth stocks that I'm showing you. And look at that, return on equity, 42%, pre-tax margin of 33. That's really strong. 293 million a day. So that's a liquid quality stock. And that green line probably, I hadn't drawn it on the monthly chart, but it's probably drawn at the all-time high. So Arista Networks, again, setting up, seeing constructive bases. If we could pause, get some handles on some of these. Again, great growth numbers. Oh, that's on earnings watch for this week. So we'll see what it does. Same thing on this one. So set up nicely. Stage 1, couple handle base. Again, good numbers, liquid, 253 million a day. RS line blue dot. just watching to see what they do when they report. SMCI, stage 4 base, again, you can view a bear market as perhaps having reset those, just keep that in mind. PSTG, setting up base on base on base. So it's been going sideways, see what it can do. SQM, this one, so you have a double bottom here. I actually view this as almost its own cup with handle, although Market Smith doesn't pick it up that way. So look at that volume dry up. That's just nice, just tightening up, volume drying up with all the EV news. I think this and ALB, which have earnings this week. Yep, almost the same pattern. So we'll see how, if this one has good earnings, maybe it'll help SQM. We'll see what it does. And then Lattice, so a little bit extended out of the buy zone, but again, really big, long cup with handle. And again, this might have been long enough to even been its own separate base. So a consolidation, if that's 6123. Yeah, it looks like it's 6 weeks long before it broke out. So I almost could treat this as a base on base, because that one's, 49% deep. That's pretty deep for a base. Let's see what else is in here. Interactive brokers, a little bit extended past the buy zone. This one might have shaken people out. It broke out, pulled back to the 21-day right there. Then it's gone up. Wingstop, this one's setting up again. Got a lot of constructive handles suddenly. Nice down slope. Volume sort of drying up. Earnings coming soon. Will Scott, totally different sector. Infrastructure, construction trailers, job site trailers. So they've been covering this one on IBD Live. Not a traditional growth area, but again, everything's not going to be perfect. And then Own Holdings, or Own Cloud Running Shoes, as I refer to them. Again, setting up long cup with handle. Could draw a sloping trim line in that handle. I know it has overhead supply, but this is an IPO, so this is really the due diligence phase. So you've got a prior uptrend right here, and it's set up super numbers. And this is the one, I'm assuming Will Danhoff loves these shoes over at Fidelity Contrafund, because they plowed into this thing, 4.22 million shares, and they doubled that in a quarter and have been holding steady. So that definitely gets my attention when Fidelity Contrafund is in one that's a growth stock and is profitable. So again, I sort of take back my kidding remark on Twitter on where all the good charts went, because when you dig in a little bit, and as Marty pointed out, there were some that are setting up. So we looked at that. Reminder, we're still in EPS season, so good time for buyable gap up hunting season. Inspire Medical this week was maybe the buyable gap up of the week. It didn't rocket out of there, but nice growth stock, doing well. Traderline IPO class is still going on. It just started yesterday. Because I'm out of town, I didn't get to sit in on the first session live, so I'll catch the recording. Still recommend that. Great teachers. Just the best book, really best investing book, I think, that's come out in the last couple years, along the lines of how to make money in stocks. So I put it up there to that level. So I do recommend that if you want to study IPOs. And this is a perfect time to study. IPO market has been dead. And if we are in a new bull market uptrend that holds, we're going to see some big ones coming out, because those underwriters have been missing all those fees. So what better time to get prepared? So my monthly online class will meet this Wednesday. You can register at the Stockyard Meetup site. The tuition is $12 per meeting. You can attend live if you want to. You do not have to attend live. Everybody gets the full video recording, the slide deck, and then I send out links to any webinars, articles, things we talk about during the meeting that might be helpful. So I normally send out 5 or 6 links along with the post-meeting email. If you haven't attended one of our meetings and you sign up as a first timer, I send you a courtesy copy of last month's meeting. So here's our agenda. We're going to look at the M factor and go over anything. We'll have a couple more days, and we'll have the CPI number out. by the time we meet Wednesday. I'll cover Canslim teaching nuggets that I either get from Bill O'Neill, IBD Live, podcast, Matt Caruso, just little helpful reminders. I think this is a popular segment each month. If there's anything new in Market Smith, I'll mention that. I got to check my notes. We'll do 2 educational topics this month. I'm going to go back and revisit this SPAC as a short candidate, which is Fryer Battery. I'm going to revisit that and give you some more updated information that I'm sort of zeroing in now. I'll give you a recent book recommendation I found that's kind of interesting that I think goes along with the shorting side of things that I wasn't aware of till recently. And then we'll look at viable gap ups because we're in the longest earnings season. So I'll sort of explain how I track that, what the setup I like is, and talk about some other resources or videos on those. We'll look at the group teaching portfolio if we have time or need to. Talk about IPOs. We did have one big liquid one last week, raised over 500 million. That's the first one of those in a while. So we'll mention that and look at the chart and see if it's setting up. Then we'll do chart reviews and stocks you guys may have asked about. So here's some webinars. Sorry about that. So we'll cover that, and here's the contact information, and I'll stop because the dogs are barking.
This conference will now be recorded.
Okay, sorry about the dogs. I was at my daughter-in-law's house, and the FedEx guy came and rang the doorbell. Nothing I could do. So here's contact information. Greenville Eastside IBD Meetup Group, the Stockyard site. You can email me about ordering those prior webinars. A list are in there. See if you don't have a list of sell rules or anything. You can get those. Follow me on Twitter, and then, of course, my YouTube page you're on. So like and subscribe. Again, sorry about the dogs. That's it. I'm out of here.